Analysts from RBC are saying that if Tesla reduces the price of their full self-driving, that would be a critical catalyst for the stock price. Today, we'll review the major Tesla stock catalysts upcoming. What can we expect for the overall stock market and the macro environment? What can we expect for Tesla's potential deliveries for 2024 and 2025? I got Larry Goldberg joining us. He's a serial entrepreneur. Thank you so much, Larry.
Thanks, Herbert. Great to be here.
Okay, let's first talk about RBC. These analysts have this idea of what they want to see happen for the stock to jump or not. It's a good conversation. We'll see whether or not you agree with their proposal, and then we'll get into other things that are coming in your predictions and your forecast for the Tesla deliveries, not only this year, but next year as well. So RBC, they're saying this: if FSD cuts their price, they're suggesting Tesla should cut their prices for FSD, and that could be a critical catalyst. So, they started off by saying that Tesla saw an increase in subscriptions of FSD software in the second quarter because they did promotional offers and price cuts. And then RBC analysts are saying that a bigger cut in subscription prices could present a major upside for the stock. So they're saying that, as Tesla reported that their cumulative miles driven under FSD jumped 60% in the second quarter compared to the first because of a free trial in March and a price cut in this subscription. Tesla reduced it from $200 per month to now $99. But RBC is saying that despite the increased usage, FSD penetration in Tesla's fleet remained in the single digits, much weaker than that seen with its peers. I don't know where they're getting this, because how do they know single digits? Where do they get that from? And then they saying that if Tesla lowered the price of FSD offering, compete better with its peers, it could significantly increase FSD subscriptions, improve margins, more importantly, highlight the autonomy narrative and multiple on Tesla shares instantly. Instead of waiting for robotaxis, it could also highlight the potential for Tesla to license FSD to other OEMs. What do you think about that proposal?
Yeah, I don't know where this guy is getting his numbers from, but it's possible that the penetration is only in single digits. We haven't been able to get that number. But the reality is there is no comparative pricing for competition. There's no competition that has the functionality that Tesla has. The few level 4 autonomous features that some vendors have are limited to, following other cars on very limited roads, and it's just not even in the same galaxy. So comparing it to other cars is spurious. And the other thing about Tesla autonomy is that it's constantly improving because of over-the-air updates, and this is not true of the other vendors, and that makes a huge difference. Finally, and most importantly, we're at the brink of these massive breakthroughs. Not at the brink, we're in the midst of a massive breakthrough in the functionality of the feature set. A massive breakthrough. And I've been testing it, and I can tell you there's nothing to compare the current release to the release just 3 months or 6 months ago. So it's crazy to adjust the price now when we have this gigantic transition taking place. We need the transition take place. We need to educate, our client base about it, and the rest will follow. So we need to wait for 10.6. We need to understand the release schedule. We need to see this release out. We need to see the market absorb this release. And I think that's far more important than some temporary price reduction, which I don't think will move the needle as much as an improvement in functionality.
It sure looks like these guys are looking for some short-term, what if they did this? What if they lowered the price? It doesn't make sense, right? Because 99 is already quite low, and bringing it down lower, it's like you were saying, it's a signal to the market that this is not worth it. When in fact, They should be raising the price. And so tell me, in my mind, we don't know what the uptake is, but let's say it's under single digits, that's fine. But if FSD improves, I've been saying that it's going to get up closer to 70-80%, if not more. If
A step change.
it's like
Let's just
it's
agree
either
a
going to
step.
work or it's not going to work, kind of thing. It's
Right.
you know, but
Yeah,
what
I
do you think
mean,
about the $99 price point? Shouldn't they be raising it as opposed to the other way around?
look, analysts look for, a $20 improvement in the stock
Yeah.
levels. We're talking about a 20, 100%, 200% increase in the stock levels when this comes to
Right.
fruition. And to play with the price, look, I have held for some time now that the pricing of FSD was wrong. The whole
Mm-hmm.
strategy was
Mm-hmm.
wrong. It started at too high a level, it pumped to too high a level.
Yeah.
It would have been far better to have legged into this thing step by step by step by step. But, Elon thought it was going to come faster. He thought it was going to come easier. He thought it was going to be there sooner. I bet you he would rather have, changed his strategy had he known this. But, we make mistakes. There you are. And
That's why they
kind of,
lowered it. But what about the other idea, which is give it away for free? Try to get more people using it. More miles today is more important than the margin.
I would never give it away free. That is such a bad idea, because then to try and charge for it ultimately is a devil of a problem. And there would be cries of anguish, screams of anguish. So, you can run all the education programs you like, but you give it away free tomorrow and you
Yeah.
charge $10,000 for it tomorrow, the next day, it ain't going to happen. It isn't going to happen, and there'll be court cases. No.
Right. Because what you pointed out is that you have to consider that all the people that paid for sometimes 8,000, sometimes 12, sometimes 15,000 one-time fee to get it. So the $99 a month is about 1,200 a year. So that's still an issue, but at least it's something versus
But the
nothing.
$99 you can stop at any time and you can pick it up again. So,
Yeah.
I mean, if you're going to go on a long road trip, you could buy your $99 choice, or look, the $99 is where it should have been right at the outset.
Yeah.
In fact, it should have started at $50 a month
Mm-hmm.
right at the beginning, then stepped up to $99 a month, and now they should be looking at the $200, $250 a month
Okay.
with this 12.5.
All of this was, like you said, it's going to change by 1010 anyways. If Tesla does a fantastic job explaining that we truly are headed towards robotaxi future and it's not later than you think, then you don't need this price cut.
If by 10.6, 12.5.2 or 3,
10.6, it's 1010.
Sorry, 10.10.
Yep.
If it's completely distributed to all drivers, and we have an announcement with a clear path of improvement, believe me, it'll be. And by the way, when I say rolled out, I mean to all cars, not just hardware for cars. That's very important. And Tesla needs to allay all this chatter about hardware 3 cars not being able to run FSD. And so I think we're fine. I think 10.6 is, it's just around the corner. It's
1010.
10.6, 10.10.
1010.
10.10.
What do you keep saying? 10.6, 1010.
I'm fixated on 10.6. Why? I don't know.
Okay.
Anyway, 10.10, yeah.
All right. So tell me about the economy. Obviously, we had quite the turmoil on Monday. What is happening? How's that going to impact Tesla? What's your prediction?
On Monday morning, I tweeted and I quoted, really experts on the field and said, look, guys, don't be chattering about buying the dip. You want a dollar cost average over a long period of time, because we're entering into extremely, extremely difficult times. Maybe the economy will survive this situation, but I think we're in a recession. And I can argue why I think we're in a recession. Everybody points to employment being, very low level of unemployment and growth in the economy last quarter. But the economy grew at 2% last quarter. The United States is running a deficit of 7% of its GDP.
Mm-hmm.
And if you tell me you grew at 2% per annum, and the government is spending 7% more than it of GDP, more than it's taking in, where's the growth? You're dying, actually.
Mm-hmm.
You're declining at the rate of 5% per year. Some people would argue that and call that a fallacy. It's no fallacy. It's just reality, because one day that money has to be repaid. And right now, the way things are running, it may end up being sooner than later. Secondly, the unemployment people are talking about being not too bad. They're missing the fact that over the last 15 months, the major employer, the person who's driven this so-called unemployment figure, is the government. The same 7% has been going to hire people, and this hiring spate that you've seen over the last 15, 18 months has been the government. Now we know that the Magnificent Seven have grown, or the Magnificent Six have grown in the last year very significantly. What that masks is the fact that all the people who manufacture goods have declined in the last year. They're in recession. They've been in property and all discrete manufacturing has been in recession for a year. So in this environment, you're not going to get growth, and you're certainly not going to get growth, in auto stocks. Auto in trouble in the United States.
Mm-hmm.
Serious trouble. And it's going to reflect on Tesla. I pleaded with everybody, stop this buying the dip business. This buying the dip business, I don't know where it comes from, but it's just bad practice. Nick Colas, you had him on your show.
Yeah.
He is such a wise head because he's been around so long. He argued on Sunday night in a note that he put out to subscribers. I'm a subscriber. Said, look, these adjustments, these recoveries in the market, these declines in the market, they take 2-3 weeks to work out. You buy the dip today, you're going to have to be buying the further dip the next day, and then another dip the day after, because this is going to take 2 or 3 weeks. Mm-hmm. The way to buy stock, the best way to buy stocks, the experts all tell us, is over time. Dollar cost average. Just buy a little bit, the amount you can afford, month after month after month after month. So all I said in my tweet was, I counseled everybody, just be wary. This is not a good environment. And I don't think it's a good environment now. I'm not an investment advisor. I'm not trying to give investment advice. I'm trying to give people a sense of risk. Mm-hmm. And it's very important to have that sense of risk, because if you want to be a serious investor and you don't have a sense of risk, you lose your shares through margin. You just fritter away your money. That's my view.
Okay. Thank you for sharing that. So your sober view of what's happening with the economy, and things are happening here, recession already. So what's your projection for Tesla's outlook? Because Elon has
Tesla. I love Tesla. I'm a long-term Tesla investor, and I continually accumulate. I don't accumulate every month. I don't accumulate possibly every year, but over time I accumulate, and I accumulate based upon, my cash position. I govern everything from my cash position. Everything I do, it makes sure that I'm, at 90% cash. And so when that percentage falls off, I hold back a little bit. And so I am very bullish on Tesla, very bullish on Tesla. I can see Tesla in 3 or 4 years' time at many times its current level. People say to me, what's your price target? I don't have price targets. I have direction targets. My direction is up. for
Yeah.
Tesla.
Okay. So you're saying that there's a potential recession. And so here's an example of what, back to RBC, what they said, right? And they goes, oh, please cut the price of FSD. We'll believe would be a critical catalyst. Okay. But they themselves cut their price target in Tesla for the next year from 224 from they reduced it by $3. Okay. Because of a much weaker delivery growth forecast for 2025, because of what they thought it was, missing earnings and deliveries in the second quarter. What's your expectation for Tesla and their volume and deliveries for the coming year and 2025?
Well, Elon has said to us that he expects to resume the 50% improvement in units in 2025, and he really referenced 2023 as the base year for that. I've argued for years that the Wall Street keeps looking at prior year sales and ratcheting that up by 50%. So the target is not really this year's sales plus 50%. It's really going back to the base year, which was 2,000 or 500,000, and ratcheting that up by 50%. So that was the number I would rather look at. And that number for next year is, I think, in the range of 2.1 million to 2.25 million. I'd have to check that number, but I think that's roughly the range that it should have been in if we had followed that guidance all the way through. And I think that's well within the bounds of possibility, provided we get the new lower cost Model 2 or whatever we want to call it, and providing we see a significant reduction in the price of the Cybertruck, and we get a refresh of the Model Y. Those are three, contingencies that I would put on it. And I think we could well get to the 2.25 million. We're going to be significantly lower than what I had hoped we would be, of 1.8 million this year, because Cybertruck, it seems that the production is not ramping on Cybertruck, and there's some conversation about the problem is being the margins on the truck. They haven't yet hit the numbers that they need to be. So bottom line is, I'm expecting about 2.2 million, 2.25 million next year.
Gotcha. So that's Elon is saying that he thinks it's going to be better than it was last year. So that means it needs to be better than 1.8. You think it's going to be under that? You just said it.
You're talking about this year or next year?
This year.
It's going to be tough to get to 1.8 million, not because of China. China's doing quite well, but because of the restrictions on Japanese imports in Europe, number one, and number two, the recession in the United States. So I think it's going to be tough. I think, and because of the Cybertruck issue that I mentioned. So I think it's going to be closer to 1.7 than it is to 1.8.
You're referring to Chinese imports to the United States, to Europe?
No,
that's
imports to Europe.
China imports to Europe. You said Japanese.
China's exports to Europe
That's
of
what you meant.
Tesla.
That's what you meant. Yeah,
3.
You said Japanese. Okay, gotcha.
Wow.
Okay, and then what did you take?
On the brain right now.
Yeah, what did you take from Elon saying in the Lex Friedman podcast? He said that Tesla will sell $100 billion of sales this year. They sold 97 last year, but they're on track to 40. They're 47 billion by the first half of this year, which means that they're going to sell 53 or.
Yeah, well, a lot turns on. I think energy keeping up its numbers can add, $1.5 billion pricing, and there could be a big fillip in FSD sales. I just can't see how we get to. I don't see the path to 100 billion from where I'm sitting
for this year.
For this year,
Elon was very confident about it. You hear what he said?
He knows better than I do. I'll tell you that.
He does. That's what I'm just pointing out, that he seems to be fairly confident about this the rest of this year. And you know him. He's the one that's most concerned about recession. He's most concerned about macro. And what Jeff Lutz is saying is that Elon sees things much earlier than other automakers, other companies, because they have access to the data that's real time.
My caution about all of this is that he didn't say we will do 100 billion. He said this year we're about $100 billion company. He didn't position it as a projection. He didn't position it as some sort of guidance. All he said is we're a 100 billion company, could be a 95 billion company, or could be a 105 billion company. This is the order of magnitude he was referencing. That's how I read it, and I could be wrong, but
okay. And then 2025. So, you saw in the earnings report they referenced you talked about a 50% growth from 2023. Not just production capacity, but actual production. And then that's when hopefully they will release at some point next year, earlier the better, the 2 more affordable vehicles. And then maybe even the robotaxi might even make a showing. Cybertruck at that point, hopefully will have more higher margins. What's your thinking for 2025?
2025 is a transition year into the new Tesla. It's the opening of the book. Does the book open with a bang? Or does the book open, gently and enter quietly and, become this massive? I think that it depends on, where you are. I think 2025, we could see the opening of the plant in Shanghai, that is to say the Megapack factory in Shanghai. That could bring in, I don't know, $4 billion by itself, or, somewhere in that range. I just don't see a 50% rise or anything quite like it now. What would make a huge difference are the new models. They could come out, they would have to ramp pretty quickly, but they could.
I think they're going to come out sooner than you realize. Yeah.
Yeah, and that would be an enormous impact. But remember, they're a much lower cost car. Look, it's a new book. You're asking me for 2025. I'm really concerned with 2030, but okay.
Okay. I mean, I'm just referencing the earnings report that says they're going to increase 50%. That's, if it shows up in the earnings, a little bit more, there's confidence that they have in that, achieving that. I think they're able to say that because they're probably further ahead in these more affordable cars than we realize. Elon did say last time, right? Either the first quarter of next year, maybe even this year. So just assume it's the first quarter of next year. But
I mean, one can take that view, but one probably needs to be a little cautious because the devil is in the detail. When you start a new production line on 1 or 2 new vehicles, even though it's an adaptation of the previous production line, it always takes time to get up there. And so there's the ramp up time. And then the other thing is production in China. The question is, do they have this transition taking place in China as well? If that's happening, then a lot can happen. Now, the reduction in the size of the production line in China and the more rapid output of China is an indication that that's what's happening. So that's really what I'm basing my forecast on. But look, if they grow even close to the 50% or 40%, that's going to be a heck of a win because it's not what they do in 2025 that matters.
It's 26.
It's what we see from 2025 as the direction of the company that matters.
Yeah.
We're not going to be buying Tesla stock based upon what's going to happen in 2025. We're buying Tesla stock in 2025 based on what we see coming in the future. And that could be a huge number.
There you go. Thank you so much, Larry. Follow him on X, Tesla Larry. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.